you please? Could you please? Could you please? Could you please? And save the world? Would you believe in brighter days? Could you please? Could you please? Could you please and save the world? Mess with fire, now it's closing in. Nothing to bear and nothing to win. Nothing to win. Could you believe? Could you believe? Could you believe? Could you believe? Step in the fire, take my hand. I'll take you higher than you've ever been. Than you've ever been.
All right, thank you for coming on into the live and sharing your essence with me in this eternal moment of which we all share an inextricable and inexorable part. Thank you for doing your part, for coming on in each and every day, and we'll do the same without wasting a single second of your time. Bada bing, bada boom, we go into the charts. So Bitcoin wicked off of, with this daily candle close, wicked off of these potential supply regions for buying for longs. Over here you have a bunch of touches from August 14th 2022, some regions up here on February 19th 2023, and consolidation over here for a few days on March 14th. So are we trying to find some support here, or is this just another leg to the downside to grab some more liquidity on this diagonal pitch fan level rejection at the 382, coming down to the possible 236 region in the Hail Mary regions of this 244782 to 23160? Let's find out if that is on the table or not by stepping into high block capital. What is high block capital? Well, it's when people lock their liquidity into the charts to get burnt to a crisp by the market maker for not using a stop loss, and we get to see where those crispy characters lie in wait or lie burnt to a crisp. So let's see where they're lying. So as we projected yesterday, I said I would be shocked if we did not come back and grab these 100x pools, and we did come back to these regions to grab the 241 million 50x character with his partner in crime, 100x $144 million character pool here, and also the $223 million character of 50x here, as well as the partner in crime up here at 25724.
Fatality.
That's right, and they have no remorse as they liquidate these guys who don't pay themselves. And as we see here, these small longs are opening, small pools in comparison to what lies in wait above. You could come down to get this 92 million pool at 25,415, but for the most part, it looks like there's still more waiting above here at hop, skip, and a jump at 25,802, and even further up at these regions here at 26 even 25,992, and continuing higher. If you just look at how these noodles, I like to call them noodles because over here on the right you see these bars and they stack up and they look like ramen noodles, and then there's more noodles stacked up in the soup up here as opposed to down here. So if I were a market maker, I'd prefer to grab this stacked pool liquidity up here. A lot of them are now in a loss, particularly some of these pools opened here in these bottom regions. They are currently in a loss. So if they come back and grab that 96 million that we were pointing out here in the 100x, they could just keep going. So it also shows on this 1 minute time frame we are at $5 billion imbalance on this 1 minute time frame. So we need to step in, expand our vision to the higher time frame external liquidity pools to see what lies in wait above. So 12-hour time frame always gives me nothing, so I just go straight to the 7-day time frame, and if the 7-day time frame shows you we have a small pool of about $20 billion up at 27k as opposed to down below on the 7-day time frame, the imbalance favors the upside. Let's go to the 1 month as we expand our vision there to see whether we go higher or not. You do have a double-digit pool up at 28,100. However, there is more double-digit pools down below at the 24/7 region and down to the 24k region, which also coincides to the higher time frame of the 3 and the 6 month, which still has hundreds of billions of dollars down below. Did we spawn enough divergence off of this $180 billion and their $100 billion friend here? That is to be seen. We still have about $160 billion all on the way down to 24k on the 3-month time frame. You are starting to get double digits to the upside of above 30k, but it's a long way to get there and not so much in double digits on the way there on the 3-month time frame. If we go to the 6 month, you also see these pools down below, $100 billion each, down to 24.3. 24 starts to taper by half at $60 billion. Do we get the final divergence play off the 24K region at 24.3, or do we keep coming lower to their partners in crime down at 22.5? Let's go see what that 24.3 region, where that would put you. That would put you somewhere smack dab in the middle here. In between the Hail Mary 1618 region of the bearish trend-based fib level. Let's go into the 2-year time frame to see where the highest time frames align and whether those stars align in the favor of upside or downside. You're starting to see the pools get taken out here on the downside path. As this occurs, are we going to see these pools thicken and start to see a narrative shift similar to the Silicon Valley Bank failure amount when we came back for that 178 billion at 25.2 before? So we've been here before and we are back here again. And will we do this again where we liquidate some longs to go higher? Let's go back to the monthly time frame and go into the charts and step into the Binance chart. So this 23,934 region of the 618 bounce region, if you are to come into these pools, would be something to note for that 24K $200 billion divergence off of this, and potentially come out of that in some divergence. If we head lower over the weekend, that could be where you find a swing long idea. This scalp long played out from yesterday. Let's go show you what we had, just to show you untouched where we left you yesterday. We talked about it potentially coming up here, coming back to kiss the cloud. What is the cloud? Well, we got to throw on our oscillators to see that. Here we go, Momentum Master, link in the description for more. MomentumMaster.info. Scroll down to features, toggle everything you'd like to see. Toggle switches are inbound for all of them, or you can look at each component as we go over it. So we were talking about the 15-minute cloud, and we said if you come back over the cloud, you should come back and kiss it at a point, and we even pointed out in the Discord when that point was. We didn't change this from the live stream, but we didn't get the move up as high, but we did break this bearish trend-based fib level, and we came down and bounced out of that region. This is in the past, it's over, it's finished, so we can remove it now. Let's see where we are going currently. As it stands right now, we are at the London close, baton pass to New York, which means New York will take over entirely, which should mean you get a kill zone event of some kind. Similar to here, you had this finish, and boom, we shot up thereafter. So after this London closes in about an hour and a half's time within this region, you'll start to see some sort of narrative shift. And what is this indicator to show those time frames? This is the ICT kill zones by Tradinator. It's free. You can check it out if you like. Let's make our way down through the time frame, shall we? So we'll start our way up in the daily and work our way down. Actually, the weekly is, we're heading into the weekend, and I believe Monday is a holiday in America anyway. So the New York pool will be, liquidity pool will be down for Monday. So we can basically count this as, this is Friday, but the people might be trading or getting out of trades longer, or quickly rather. So what we previously saw was the suppression of the weekly crossdown event back here in May 1st has been steadily suppressing the weekly time frame, and we have yet to get above it. To even start making a bullish narrative that would get us above these resistance regions, you would have to start seeing the cross up event in this to even start turn blue again, which it has not now for 5 weeks in a row. So are we at the end? This has been 1, 2, 3, 4, 5, 6, 7, 8, 9 weeks running of downside with only a few weeks of upside retrace ideas in mind. If we go to the 5-day time frame, we previously watched the 5-day close. We have 3 days for that to occur, which would put you on the weekly candle close coinciding with the 5-day. The cloud is starting to taper ever so slightly here on the 5-day. The momentum that was previously to the upside is starting to take into effect this retrace and say, hold on a minute. And this also coincides, the super trend coincides with the 0.66 of this golden pocket region. So do we come down into this pocket? This does seem like the case on the 5-day time frame. If we look at the stochastic RSI and the Williams could still come down a little bit more on the 5-day here. The one thing that we were pointing out of note was the 3-day, which closes in a day and 10 hours, which would put you at basically Sunday my time. So we're currently holding the 200 weighted moving average on the 3-day time frame. We broke beneath the cloud here, so even if you come back for a bearish retest, you could come back inside this cloud a little bit before getting rejected off some of these fib levels like the 706 at 26,238, or potentially coming up to the larger bearish trend based fib at the 26,651 region. Let's go into the oscillators. You do have that double bottom now with the green tidal basin of the river filling up with water here. You get those double bottom events with the rising sun. You start to come out of these regions with a gloriful rise up potential. So are you seeing that potential come to bear? It could be, if you're getting this to come up with the cross of the rising sun event on the 3-day. The money flow is starting to flow back in here. We are saying that this money flow coming beneath the RSI does suggest the money flow comes back to the RSI. It does do that over and over again. Does this play out is the question. Let's go into the daily time frame. Daily time frame stochastic is lowering down to the 22 level. You're also getting oversold on the Williams again. This is a good place to be for a long idea. Similar to here, you have kind of this oversold status, and boom, we shot up from there. So when you get the Williams in a low position alongside the stochastic RSI, and you're getting some bullish divergence on the money flow or the Williams, which you are, if you look here, we're getting a higher low on the RSI here, but the money flow rather, but you are making a lower low on the price action. So this bullish divergence on the money flow on the daily time frame is what we're subtly looking at. There was an attack on USDT, so there's something to do with that. Whether that is substantiated or just hearsay, seems to be that it may be legitimate, although it has stabilized. What is that about? I have no idea. I only follow news in a cursory glance. If you also look here, the crossover of the 22 could be inbound. If you get these crossover events, they do kind of play out. Also, if you look at the stochastic RSI, the momentum is in our favor for this 22-hour time frame to play out. The Williams also in conjunction with that idea on our treasured 22, starting to see potential momentum burst on the 22-hour time frame. In coalescence, we have the 12-hour time frame also looking to cross up here. We have 9 hours and 18 minutes for this cross to be real or not. This can change all depending on whether this candle closes at this state or not. If it turns red and goes beneath here, this will cross back down again and be negated. In similar fashion, we had this negation event occur obviously here. So all if then statements about that, and you have this double bottom potential coming in. Not as nice and dip worthy as here. This is kind of the way that I like to see it. If you have these two green basins here, that's generally what takes you to the promised land of the upside. We're not really seeing that ideal image here just yet. So does that mean we are coming lower or not? Going to the 6-hour time frame, we talked about this coming to the oversold position and why we saw that idea of coming out of here. We are getting the cross up that is confirmed by 2 6-hour candles here. So it's not going to be easily negated. The price action is above these baselines, which is suggestive of more upside on the 6-hour time frame, even though you're seemingly fatiguing on this and possibly crossing down to retest the 50 level of the stochastic RSI. The Williams is in your favor here on the 6-hour time frame as well. 6-hour time frame does give you legs to your 4-hour, so even though your 4-hour is getting overbought here, the 6-hour does tend to give you these double top scenarios of these bursts up if you have the 6 and the 12-hour support. This is also why last Sunday we were talking about coming up here a little bit too, because we had the crossover event on the 4-hour with the coalescence of the 6 and the 12 in conjunction. So we're in a similar boat here, although we are overbought, so you need to take heed of these rejection wicks and the cloud idea here. If you cannot negate this bearish trend-based super trend, this super trend level, if we cannot get above this level on the 4-hour time frame, then it's just more downside for whatever burst it gives you. So these are dynamic support levels back tested to be true. We were talking about last Sunday how this 236 model gave you these 7 time frames overbought, and then you also had the 236 entry and you did not break the super trend of the bearish super trend. So it gave you 2 opportunities to get in on this 236 and to the downside. So if you cannot break these super trend levels, we did break it on the hourly time frame, so that's one little potential idea out of the rut that we found ourselves in down here. So we are getting a cross down event on the hourly time frame. These are noteworthy. When you do go sideways, you start to see these become consolidation ideas for scalps. So as it stands right now, we could be seeing a cloud kiss to this super trend of the shift here to the upside. So coming down to kiss the cloud on the hourly could be the play. As of the moment, we do have the Williams alarming event telling you could be potentially dumping out of here in a similar fashion here. So are we going to reset the Williams and bring the stochastic down further? It's been me toying with the idea with this last drop down on the hourly time frame. So you have the hourly and the 4-hour kind of at ambiguous levels, although hourly starting to suggest that it's getting oversold. Most likely you're coming down to that 100x pool that we outlined for you in the beginning, the $96 million character. Let's zoom in once again. I think we knocked him out actually. This guy, where was it? Here. 92 million, pardon me. So this 92 million at 25,415 could be the target they are aiming at. The 100x pool down here that they let survive for whatever reason as they pinged in more shorts. So they'll generally, if they're intending to go up, they'll take out all the 100x first and then go up. You call this a stop hunt rise idea. So going for the stop hunts of the 100x is one way to avoid having to pay them, and also inducing more shorts. We'll keep you updated as more pools enter. As it stands right now, there is no one being enticed or induced to enter just yet. Cross down event on the 15 as well. 15 is starting to come down with the remainder of that hourly. So what can we do? Well, let's draw a fib from the impulse to impulse here and see if we can find some sort of confluence here. It looks like we're coming down here. Oh, if we're coming down into this 618 region, we just saw them liquidate that guy. You could get a bounce off this golden pocket region. Let's see what's going on here. Getting slurped up right now. That was your stop hunt. So these golden pockets, if you draw the impulse to impulse, these give you these potential entry models. It looks like it's bouncing directly off that, although this is a very fast looking dump on the 1 minute. That's a large 1 minute candle for BTC. Let's go see what is going on here for who they're taking out. Shout out to everyone here. What's up, Prehab, Lomips, Manzo, what's up? He just got knocked out. He sure did. Let's go see where. Oh, and they pinged a lot of short liquidity. So this is how you get to see $300 million of shorts entered on these pools here. These are, I guess, guesstimates of where their stop based on the pools of all of them enter. So there's more shorts that have been entered to longs, and they have come down and taken out not only the 100x but these 50x pools down here. So all of these guys are now off the table.
Fatality.
Yeah, so these guys are gone, and it brought in some more longs. Are they going to come down and take out this 100x and say nope, or are they more enticed now by these shorts that entered off of that drop? Let's go back here and see what they're going to do. They're bouncing off the golden pocket region, and this is how you set up an entry model if you're considering doing this. That was a very nasty 1 minute candle. Looks like it could be even a Bart Simpson to continue back down to the range based off that idea. Be very careful with all the FUD going around. And let's take a look. So yeah, bouncing off the 618 idea here and seeing what, as it stands currently, they've induced more shorts than longs, and they're now stacking these 25x and 50x up in these regions to pave the way for upside. So the road to the upside is paved by shorts, and the road to the downside is paved by longs. So the more longs that enter here, the more likely it is we come down. The more shorts that enter here, the more likely we go up. It's kind of like an antithetical to their own cause kind of deal, like a tug of war game. They're playing tug of war and they win the tug of war, but they lose the trade. So the more people on one side, the more likely they win that tug of war with price action to the upside. So as it stands right now, it looks like we're highly likely to come up to this pool up here at 26k even, and even above at 26,155 based off of how much was induced just there. So this could have been the stop hunt before you rise idea. The price action noodle is stabilizing as of this moment. Let's just see what more liquidity enters. Oh, by the way, consider liking and subscribing if you have not already. This costs a pretty penny every month, so you get to see this live for free. So they're also bringing in some more as they meander around here, so you're getting more pools enter, 53 and 180 million. And over here, the second amount, 44 and 307. So there's less shorts being opened up than were just opened there. All right, so let's go back. You're getting a rejection wick here. Looks like they're trying to hold this weighted moving average on the 15. That was a nice entry model on the 618. We'll go over a certain entry model within our Discord really quick. I put out a framework here. I don't know if I can open this actually. No, I can't. But I have an entry checklist, but it's similar to coming into these golden pockets after you have a change of character and coming back into here. So if you were, consolidation is generally not a good idea to enter along, but waiting for a stop hunt before you go up. So holding this region in 9 minutes, if we, and the hourly as well, if the hourly, knowing how the candles coincide with one another, if you get the hourly and the 15-minute closing in a manner here, bouncing off the cloud and this, holding this super trend level and this golden pocket, this could be your stop hunt before you go higher. So you could be seeing this come down to go up to here. How do you get the measured move for this? Well, as it stands, we can also use the bullish trend-based fib level, since we have now created a change of character, so we can kind of shift this up here. If you hold this 236 level at the 25,407 region, then you could be coming up into these regions up above as golden pocket at 26,501. So this bullish trend-based fib could take you up to here if and when you hold this 25,407 region. This is pivotal to maintaining this resistance as support. If you cannot hold this previous resistance, then it maintains itself as resistance, and this is also embedded in the math of the impulse retrace idea. This is also what you would call in Elliott wave your A, your B, and your C wave. So it's all 40 different ways for snow. The Eskimos have different names for snow. It doesn't really matter what methodology you use, cup and handles, whatever, as long as it maintains your math and your criteria to remain in. Cloud is shifting here on the hourly, so I still do like it as long as we can close out in 7 minutes. So we'll see how this 7-minute candle close is for the hourly and see where it takes us. Got to negate this cross down event, otherwise this suppresses the price as it likes to do here. Let's see how y'all are doing. May we say that it has finished tracing the cup and handle? Has it finished retracing? Well, you have to know when the candle closes. So basically coinciding that with these candle closes as we are doing right now, watching that we have 6 minutes and 54 seconds for this 15-minute candle close, and how much of this gets bought back, how much bullish pressure can be maintained to trap the shorts here. And based off of that, we'll give you the sentiment of the candle close, and once that candle is closed and locked in stone, it kind of tells you how much of an interest was generated in that buyback wick. And there are objective measures to measuring candles as well, which we do go over in the stream, basically taking a retrace on the candle itself. But I can tell you right now, it's not a bull hammer or anything, so we're not going to do that just yet. But when it comes down to a bull hammer idea in the works, I will definitely do that retrace method on the stream. All right, so we got 6 minutes for this candle to close and to see how much of it is given back. But this is kind of what you wait for on the Momentum Master suite. You see this break through the cloud and it shifts and thins, and then you come back and you kiss it. And then if you can kiss it, there's where you'd find your entry model if you have that 618 sauce inbound, and then you could basically catch this continuation idea. Hourly also seeing 3 vector candles in terms of sell-off, sell-off, sell-off volume. You have 3 vector candles here that did not give back as much as these green vectors pumped into it. So this is kind of some absorption of the liquidity here, possibly to continue if these candles. Here's one thing I was working on a while back, all right? This is gonna blow your mind. So these vector candles, the PVSRA green candles here, if you measure these, like let's just say you measure this here, that's a 1% candle, right? Then you move it over here, and guess what? That's a 1% candle. And you move it over here to that one, that's like a 1% candle. Granted, this is a little bit longer if you include the wick. It's a 1.64. And then you go over here and you say, same player 1, player 2, player 3. Is this player 1, player 2, player 3 exiting, or is it the same player taking a chunk? They're taking half their position out, half their position out, half their player 2 taking out their position. So do we have player 1 take out their position from here, and then player 2 is taking out half of their position or whatever. And so you can kind of look at these candles as players or exchange players, and this is also what you would look at on a 15-minute time frame as you see the times for when this happened. So you had London close last time, you had these vectors enter about here on the London close, and here we are at the London close again. So is this London close character closing out a day later, and then in this middle of the New York session character going to close out at a different juncture as we go higher? And they try to close out into the liquidity, and that's why they call it sell side liquidity. They sell into the longs that get liquidated, and then they basically absorb those, and then if it holds the interest using the retail liquidity, then they can just continue bouncing it higher, and then that same player enters again. All right, so we're holding the super trend, and we bounced off the golden pocket with a nice buyback wick. The buyback wick is now getting to that region where I would be nice to consider to measure it. So what do? You take a fib retracement tool and you go from wick to wick. Now I have it set to my pocket mode, so I set it to basic. This is definitely bullish right now. I'm just showing you what you would do. You would measure in the direction it goes from wick to wick. And if the body of the candle can fall within the 382 region, it is objectively bullish. So this is an objectively bullish bear hammer close in 2 minutes and 2:22 seconds by the looks of it, even if we can maintain this level. And it's also the 236 of this bullish trend-based fib extension level. So we got bullish confirmations of some bullish moves. So that looks like it was your stop hunt rise to the upside, as we see here, and it looks like we're going to continue on these journeys higher to take out some of these shorts. Is the squeeze going to be real? It looks like it may be here for BTC. Boom, boom, boom. So it looks like we're heading up into these pools. We had these pools laid out for you from long before up here at the 26.443 region. I'd be surprised if we don't come up into that now based off of how quick we're getting bought up here. The squeeze is real tonight. Looks like we're coming back to squeeze some shorts. I bet you they're not opening so quick right now. Maybe more longs are. And so this is where you start to see the pinging of the liquidity. You're getting 70 million enter here in shorts, and then 116 in longs. So they're trying to move it with a fury to avoid having to pay the longs as they make their intentions clear to come up to these regions. They want to avoid paying as much as possible. Or is it going to be a Darth Maul close that comes back down? 49 seconds for the hourly candle close here. They didn't really have much to grab here. There's more now entering here, but this noodle, the broth to the noodles is greater, so it looks like their interest is coming up into this region quite soon. By the looks of it, I'd be surprised if we don't make it up to the 26K region again. 26K would put you at the 786 of this bullish trend-based fib extension level. If you start to consolidate up in here, you can consider moving your stops up into profit and see where it goes from there. That's basically, I use these levels a lot for monitoring stop losses. So there we go. Candle closed above this range. It looks like the bullish intention is known. It looks like the short squeeze is on, ladies and gents. So we'll leave it at that. I think Bitcoin in a nutshell. Let's go into the Nas and see what we were trading in the open a little bit. We snagged a few 40-point bangers, got $1,000 for the day, and just called it quits while we were ahead. But let's go see if we can snag some NASDAQ juiciness for you today. So we caught this downside move and then caught this upside move here a little bit. So we're going to go see where what we can see in the charts. So once again, in the NASDAQ in New York session, one 5-minute candle contains more volume than the entire day of Bitcoin. So it looks very messy and choppy on this 1 hour time frame, but you can go into lower time frames and start to see something beautiful because it maintains structure in such a beautiful fashion despite being a low time frame. It's just the trades don't take all day to play out, so you can get in and get out without staying locked in a trade all day. So you can get your $1,000 as I did in an hour's time and then just move about your business. So there's something to be said about the legacy markets, which is not crypto, but it just has more liquidity. All right, so let's try to see if we can provide you an entry model or two to just show you how it works with the Momentum Master Suite. So you try to get these triple flips. So you get the cross down event here. You're starting to get a cross up here on the 1 minute. You had some previous bearish divergence. It looks like you could be making a C leg down here on this 30-second time frame. Although you are shifting the cloud here and you're getting some indecision, so this could be a ABC upwards too. Kind of idiot boxing in a way here. At the bottom of the Keltner, and you're getting that indecision on the 1 minute, so you could just do like this, and you could just do a paper trade real quick and just see what's going on. It's not a real trade, so I'm not actually in this, I'm just showing you what you would do. Potentially speaking. So you're getting some volume interest on the 10-second chart, although this could be, we're gonna get, the numbers don't necessarily match what you would be doing. There are micros and mini contracts. This is not a mini chart. So the NMQ would be a micro chart, which is less volatile. I would not be trading minis in this manner, so I would not be experiencing the drawdown in this manner like this. But you could DCA into positions with micros better, so we'll just provide you with that idea, that input. And so you're getting some volume stepping up to the plate, and you're starting to see this thinning of the cloud, the structure holding on the cloud. We're getting possibly breakthrough of this resistance of the adaptive and the weighted moving average on the 30-second. The one thing that to note on the 1 minute cloud is that this is pointing down, so this is potential resistance on the 1 minute. We have to break above, and you can move your take profit up to the bearish super trend level, and then once you start to lock in some, you can put your stop into profit. And on NinjaTrader, you can use the ATM strategy, and the ATM strategy will trail automatically. ATM stands for automation, so you can set up this automation within NinjaTrader for free. It's quite beautiful. Links in the description if you're interested. Bulinox is quite a nice, friendly prop firm. They have a code for $15 evaluations if you're not on that. I don't know when that expires, but I have 10 of them. This might be hitting the stop right here. But this is why you take it. You're in and you're out, and you're neutral. Your default position should be neutral. You're not bullish or bearish. And I'm just gonna take that. Wait, what? It should have knocked me out, but. And this is what you would be doing scalping if you were interested in that type of thing. Probably going to break the range though, to be honest. You got lunch in an hour or two. Knowing when lunch occurs is also a interesting thing to note. They pass off the algorithm buttons to the interns to control. This isn't your ideal entry model, by the way. Something you'd want to see is more about here. This is something you'd be seeing, this ABC to the downside, like an extreme liquidation event at the bottom of the Keltner channel. Like that is a beautiful double bottom play out of there. This is kind of in the middle. This is not generally what I would normally take, but I'm just trying to give you some sort of idea how quick it moves and how quick you have to be to react. Bounce off the 10-second holding of the super trend here. Is that going to hold? It's going to kick me out perhaps. Yep. Oh, is it holding? if you do it on like, what's it called? Micros, there you go. If you're on micro contracts, each point is $2.50, not $25 like it's showing you here. So actually you can do like 30 contracts and it's not a big deal to DCA. If you do minis, you're going to experience that huge amount of drawdown. But I like to do like 3 to 5 micro contracts, not minis like this. But you're seeing the cloud kind of hold in a manner here and shift on the 30 seconds. So you're getting this conjunction of the 10 second with the 30 second and the 1 minute pierce, trying to flip the 1 minute cloud here with a double bottom and the baseline in your favor on the 1 minute. So it's starting to make this narrative of possibly going up, which is why I was looking for longs. And then we could just move that up there and just take the profit, boop, get another $1,000 out of that. And then you're just like up like $1,000. And then you're neutral, and then you're possibly getting rejection off of that range, but you just broke the super trend on the 30 seconds. So now you're officially bullish. If you can close a candle there, the super trend has shifted, and boom, bang to the upside. And that's how quick it reacts. You don't have to sit in the trade all day, and you can just take your money and go. And if you have strict risk management, then it is a risk management simulation that pays. So that's how the NASDAQ works, folks. That is how the NASDAQ works. And let's go back to BTC, see how it goes. And then while you wait hours, like 1, 2, 3, 4, 5, just small moves for BTC for like 10 hours, the NASDAQ's just going all over the place. Well, ladies and gents, we are at this crossroads for BTC. Does it go up and continue higher over the weekend? What is the algorithm going to be set to for that Juneteenth holiday close? We will be down that pool on Monday. Looks like they could come back into these longs, 100x longs that opened. The 100x longs need to learn to be more frugal because their stop loss is not that far away, and they're opening up into these breakout candles. You know what I call breakout traders? Neophytes. So the neophytes are going to get basically burned to a crisp here most likely, and then maybe they peel out because they took out these two $307 million pools, so they can come back for a little bit of these 100x long characters while they induce some more shorts and keep them locked and loaded for the longer play to this region. So they could come back a little bit, particularly into these 100x pools before heading higher. Maybe even come into the 50x and get a little bit scared and bring in some more shorts before going higher. All right, ladies and gents, that's my story, and I'm sticking to it. I hope it was short and sweet and worth your time. So thank you for coming on into live and sharing your essence with me in this eternal moment of which we all share, an inextricable and inexorable part. Thank you for doing your part, for coming on in, and we will do the same, bring in the fire, the precision, the accuracy, and all that fun stuff, and we will catch you on the flip side.